morning, everybody. It's Thursday, February 1st, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to that during the show. Real quickly here, overnight markets had March corn down 3 3/4 at 444.5. March soybeans were down 14 1/4 at 1208, and March Chicago wheat was down 6 3/4 at 588.5. This morning, USDA was out with export sales. A real solid week for corn, a little over 1.2 million. That was at the high end of the estimates for corn. And then 144,000 was sold for 24. Soybeans, pretty putrid. We're going to talk about that here in just a minute. 164,000. They were looking for the bottom end of the estimates was about 500. So a real poor week in the bean complex. And wheat, also kind of towards the lower end at 322,000 for 23. 275 was kind of the low end of the estimates, but solid meal sales, almost 500,000, 494,000 for meal on the week. We also had an export sales announcement that was announced this morning. 206,834 beans to Mexico for 23. So we'll kick it right off, guys. A couple things to talk about here this morning. We had a pretty solid close by all accounts yesterday, given the weakness that we started the markets with, seeing sort of the same kind of action here this morning. But what are we looking at here as we go in today? And I know, Dustin, you want to talk a little bit about this bean sale number and where we're at on the year. So good morning, guys.
Morning. Yeah. So obviously very dismal sales for the weekly number from what analysts were expecting. So this time of year, it is important to remember, though, that we're usually not competitive. We're right in the glut of Brazil's harvest. And we're sitting right now more than $60 a metric ton more expensive than Brazil's offering. And they have a location benefit for the world's biggest buyer. We did get that sale to Mexico, so I think that's really what we should be counting on this time of year. And we are also, we're actually pretty far along. I mean, the USDA has already dropped their export number quite substantially. They're down to that 1.755 billion, I believe. And so we're still, what we sold so far is about 350 million bushels shy of that. So that's basically what we have to make up between now and September 1st to meet the USDA's estimates. And, in the process, we're also looking at record crush every month. That's one thing that we continue to see. So even if we drop those exports even a little bit more than that, we're still at a well below a 10% stocks to use ratio. I think right now we're projecting closer to about 6 to 7% stocks to use ratio. And that's using less bushels on hand than we had at this time last year, as the stocks report showed as of December 1st. So I think looking at that number, it's definitely a dismal number, but to say that that's going to tank the bean market because our exports are lagging, I think it's something to be somewhat expected at this time of year.
I think that was a good point that you make. We went through time and sales here this morning just to see what that reaction was. And if you look at like a 730 market, we were kind of trading towards the lows and we broke a couple cents, but it wasn't this drastic washout that, would have signaled that was what they were looking for by any means. Quick question here, guys. John's asking, is there enough demand in the grid as it is currently priced to get to 350 million bushels exported for the balance of the year? So I think building upon what you were just talking about there, Dustin.
Yeah. So obviously we just had another sale, 200,000 metric tons to Mexico. There's other things too that often are overlooked, which is like, we're still going through the process of figuring out what that South American supply still is. And a lot of times we have seen a seasonal rally that comes after this point, partly because, we still might see some surprises there. Out of Argentina, for example, they're looking at very hot temps. Their rain's kind of flipping back and forth through that. But there's some forecasters that are talking about sub-trend line yield already in Argentina with what we've had in the forecast. And so I would not discount a 1.755 billion number. I mean, beans are one of those products that I really don't want to get too bearish on at this time of year, just because there's still a lot to figure out, and we're still showing well above 200 million bushels crushed domestically. So the fact that we have such a strong domestic market, again, the fact that we're $60 metric ton more expensive than Brazil, that's not something that necessarily scares me that we need to immediately drop $1 to go meet them and compete with them. We're capable of running a premium to them and still having a tight carry out in the same breath.
Yeah, that's good stuff, John. Thanks for the question there. Also, we were talking this morning, we looked at, and you highlighted this in your commentary last night, Dustin, just about the next 5 or 6 days in Córdoba, Argentina. And we were looking through their, expected weather, and it's, anywhere between 96 degrees and over 100 with less than 20% chances of rain for each of those days. So I think when you break that out, we know what that would mean here. So, as we talk about things potentially being supportive, we're wrapping up the week. We got a couple of trading sessions left, but still need to be cognizant of that as we go into the weekend on any sort of maps that could potentially flip or, change. Because I think that was one thing I saw this morning was they can't get agreement in that, 12 to 15 day outlook, which we generally see as being, a little bit harder to pinpoint. I get that, but that thing keeps flopping back and forth. It's going to certainly be uneasy for us.
Yeah, for sure.
Yeah, I think South American weather has not been perfect, obviously, and there's it's still yet to be determined of where we end up. We had a ton of acres, obviously, down there, and if Brazil really is 155 million metric tons, then that's going to alleviate a lot of those global supply concerns. But to what degree has that been priced into the market? Coming down a couple dollars. A lot of that's been led by fund activity. It's been led by falling crush margins, but we're still seeing very good crush demand in the U.S. So again, I think it's hard. It's hard when you're talking so much more supply between Brazil and Argentina from where we were last year to justify a $14 price at this point. But some things can surprise us still. A Brazilian trucker strike pops up, or there's some sort of logistical issue. And, I just don't want to discount bean tightness as being something that is just completely gone and solved at this stage in the year.
So when you talk about like historical stocks to use ratios, I mean, you get under 10%, Dustin, that is a historically tight number for no matter the years that you look back, right?
Right. And, again, it's probably not enough to be bullish on its own because we do have such a high competition down south. Sure. But I think just taking stock into the one number that everyone should be focusing on when they get to the Jan 12th report is where DS1 stocks were. And, we all focus on the fact that they raised yield and lowered, but they also did lower the acreage number at the same time. But the stocks were really not that far off from what the market had been expecting. So we're still looking at a stock number that was actually less than it was last year because we just had too few bean acres. And we still have to determine how much competition is going to come from down south. And again, I'm not trying to be bullish beans. I'm just trying to play devil's advocate that, we see such a break and it's counter seasonal. A lot of times it's something that we are, we're not quick to go and jump into selling for the old crop. Now, new crop, I think may be a different story. I think there is a better chance for a more even split of beans and corn than what we're seeing on a lot of these early surveys, like the Farm Future Survey or some of the USDA numbers have come out. Mm-hmm. And in our experience, when you take that 3-year average corn price and you dip down substantially below that 3-year average, the appeal to grow beans is there anyway. And at a 2.5 ratio, new crop beans divided by new crop corn, I would be on the lower end of estimates compared to what we've been seeing out there. I don't know what the market's really trading. We won't know until we actually see the March 30th report and the June 30th report of what the market had been trading going into it. But I would say milk 24 beans, maybe that's a different animal at a 2.5 ratio. I think that's still going to attract a lot of those corn acres, those 94, 95 million corn acres last year to be planted towards beans this year. And, even if you're at like 91 million corn acres and 87 million bean acres, I still think that's a pretty favorable number for corn and bearish number for beans compared to what the market's trading right now. So
yeah. It's going to be exciting. We're turning the calendar, guys. We're starting to going to start to average out our crop insurance guarantees for spring prices here today. Today's our first day, so hopefully we can get a pop and start getting this thing going a little bit. We will be updating here in the war room every day, not only that price, but we're going to be looking at those volatility factors as we've talked a little bit about, because that will affect the premiums for your crop insurance policies. So and shameless plug, now's the time to start looking at different options as well. Are you getting the right crop insurance policy in place? Are there different products that you can be using this year that could maybe bump up some of your guarantees or things like that? We are doing that actively on a daily basis with growers. So please, if you're looking for a second opinion or something, give us a call. We'll love to go through it with you. Guys, pivot here just real quick. Yesterday's Fed announcement looks like it's highly unlikely we're going to get any kind of cut in March. Kind of punted it to that May-June timeframe, but the outside markets really were, I would say, largely disappointed in what they heard. Any 30,000 foot view feelings that we had based on what Powell had to say yesterday?
Yeah, I don't know if you want to take that, Jason, but my thought on it just initially is that the market is expecting 6 rate cuts coming into this time frame, and Powell came out and flat out said, as it stands right now, I would not expect a rate cut in March from what we're seeing today, and that's I think where the shock came, is that everyone's expecting that the Fed's going to immediately pivot after that December meeting and go into a cutting phase, and that's the market's been trading, and the market's adjusted that a bit, right? The average rate cuts now coming into May, June, I believe, instead of March, and that has implications for commodity prices. Obviously, one thing I was noted too yesterday is just considering all of the problems that we're having, in these oil producing regions right now, that oil just simply cannot move higher. That is a bit of an albatross on the market in general. So I can see why the market's projecting these rate cuts, right? The commodity prices are not necessarily signaling that things are getting away from us, and that rate cuts are maybe justified just from that standpoint. But we go back to 70s and 80s style inflation, and they did pause too soon, and it bit them. Right. And I think that's the main thing everyone's watching, is that they got it wrong in the first place. They didn't foresee how bad inflation was going to get coming into this time frame. And they've got a little bit of egg on their face where they don't want to start just immediately pivoting too soon and then run right back into inflation and all the work they've done up to this point.
Yeah, I thought that was interesting to point out. He referenced that soft landing narrative that he's brought up a number of times, and it said, listen, it's going to take some time. We're not anywhere close to presenting you with that soft landing that we've been talking about. I thought that was one thing to note. Jace, something to add there?
No, I completely agree with what Dustin was saying. It's funny listening to these guys, right? They talk out of both sides of their mouth,
Yeah, that's no kidding.
And I get it too. We're kind of in that business too, right? We'll kind of give our opinion on grain markets, but then, give the devil's advocate. Well, something could change, right?
Yeah,
so
not held.
Not held. So it's
like a weather service,
right? It's comical, right? But I do get it. I think the inflation numbers are trending the right direction, and it's too soon for them to take a victory lap as much as they'd like to. Obviously, the stock market is getting ahead of them and saying we're going to start taking the victory lap. The rate cuts are coming. I agree that they are. The question is when, to Dustin's point. And the risk is too high, like Dustin was saying, for them to be, for us to start cutting rates when there's not a lot of the economy seems to be doing okay, right? So if I was in their position, I'd do the same thing. Why? The stock market's not collapsing. Things are going okay. The soft landing seems to be happening. So there's no rush to start cutting rates yet. That's something in their tool belt they can use if things turn south. So
Sure.
That makes sense to me.
No, real good stuff. Visited with Rylan last evening again. Sends his best. He should be back with us here next week. But yesterday we had a large cattle inventory report. Really generally viewed as pretty neutral based on what Rylan had seen going into the report. I'll give you a quick breakdown here. All cattle and calves were down 2% at 87.2 million head versus 87.58 million head expected and 88.8 million head a year ago. The beef cow inventory was down 2% at 28.2 million head versus 28.18 million head that the trade was expecting and 28.9 million head a year ago. Heifers were down 1% at 18.5 million head versus 19 million head expected. A pretty significant drop there, and 18.76 million a year ago. Total calf crop down 2% at 33.6 million head versus 33.67 million head expected and 34.44 million head a year ago. Overall thoughts, cattle supply tightened further with no expansion in the breeding herd. The feeling is that we'll likely need to see higher cattle prices or lower input costs to encourage this expansion. And it could potentially take both of these factors to get that needed expansion that the market's asking for. 2025 futures prices are already reflecting that sentiment. Bottom line, no real surprises on the report to really shock the trade. However, the trend continues to be expansion necessary, low numbers. So a little positivity there to wrap our show here this morning. We just came into the open and beans are popping pretty good off the low. We opened pretty sharply lower, made a new low and then rallied here. Right now, March corn's down 2 3/4, 445 3/4. March soybeans now down 12 at 12.10 1/4. They did print a 1204 3/4 low, so nice little bounce off the low. And March Chicago wheat is down 4.5 at 590 3/4. One administrative item that I want to talk about before we wrap. Next Tuesday, February 6th, the guys are going to be putting on an exclusive webinar specifically for AgYield consulting clients. We're going to talk about navigating these ARC and PLC decisions that need to be made, how that works relative to the marketing that you're doing. And it's going to be a nice little presentation that these guys got put together. That's going to be at 2:00 Central Time on Tuesday, February 6th. Pre-registration is required. I know we've sent the link out to AgYield consulting clients. If you need help registering, please don't hesitate to reach out and give us a call. Every day that the markets are open, we are streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Standard Time. Appreciate the visit here this morning, guys. It was a good conversation, and we look forward to wrapping up the week tomorrow, 8:15 Central Time. Have a great day, everybody.
Yeah, thanks, guys.
Thanks, Tim.